Those desirous of meeting me in Bahrain should come on the 24th of May, the Friday. We decided to do an event there because we had covered all Gulf countries and missed out only on Bahrain. Even during my long stay in Dammam, I had never made it across the causeway to Bahrain. So we decided that we'll visit Bahrain. I hope to see you in Bahrain on the 24th of May, the Friday. If you'd like to meet me, kindly message us to the WhatsApp number given below or drop a mail to the email ID given below. Once again, I thank you for your support.
Hi everyone, welcome back to Be Rich. Today I wanted to talk about what's happening in the US because the economic data were out and the US economy is not growing as expected, which has dampened the mood in the stock market and has led to rallying of the gold again ahead of the US inflation data which is coming out. And so the idea of having a rate cut from the Fed seems even more distant. And then there's even a higher chance of actual rate increase, which seems more likely on the cards. And all this is not going to happen in the month of June now. If anything does happen, it's going to be in the month of September. And by the time it rolls out, it will be October. So this year, there's nothing much is going to be happening, is what the growing sentiment in the investor seems to be. The other major news is in the tech news, which is about Google. Google seems to be doing very well in terms of their earnings, and they issue dividends, and there's almost an $8 billion share buyback which is there in the offering. So all that has spurred Google's share price to go up higher. Meanwhile, Microsoft's third quarter results are also doing very well. Its AI revenues are up, and Azure's revenue also beats the analysts the market's been estimating on. So that has also been some bright spots for investors. While in India, if you look at it, we have Tech Mahindra, whose net profits were being down, but dividend has been declared. And they have brought in a new CEO, Mohit Joshi, who is actually from Infosys. And he has chalked out a 3-year plan, which is to turn around business. And he's promised better returns than Infosys, which has spurred the share price up by 14 to 12%. For the last I checked, maybe it's probably a little down right now. The other major news is, of course, Nestle. So, Dr. Reddy and Nestle are going to create consumer based products. These are health supplement products and other products allied to that, is what Dr. Reddy and Nestle are planning to do. And if Dr. Reddy manages to create a product and manage to show proof of concept, Nestle is promised to take a call option on it and buy 60% in the next 6 years. Nestle has also came out with the news that it's planning to launch its premium presso pods in India, and it's opening its first store in Delhi by the end of 2024. This is one of the flagship products in the high-end range, Nestle Nespresso, and we have seen already there's a huge market in India for the compatible products. Those of you who are in coffee, drinking coffee, would have seen this already available in India. And there's a huge grey market presence of Nestle and Nespresso products in India. But Nestle has decided to enter India with that product. This shows how mature that market is in India right now and why Nestle has decided to come, because it is considered to be on the more highest band, coffee band, if you look at the complete range of coffee products which are available currently in India. Meanwhile, ICICI had a problem which came out that thousands of its credit cards had a major glitch, and the numbers and the CVV data of customers and full credit card information had a glitch, and if customers whose CVV and credit card numbers were mismatched, and people got erroneously wrong information and wrong CVV numbers of cards which they do not own, there was an error in mapping. ICICI did confirm that it's around 17,000 freshly issued cards which were there, which got into this. So that was another thing that made the news, which comes on the heels of what was happening with Kotak yesterday, where me and Anand had spoken about it on this channel. Kotak has, meanwhile, Uday has come out and said that there is assured resolutions for the issues with the RBI regarding its IT system deficiencies, and has said there shouldn't be any problem going forward, but the shares have slipped by 11% so far. The other major news is Tata Motors, DVR, and Tata Motors. The merger proposals come to vote on 26th of April, that's today, and Tata Motors has asked its shareholders to vote on this, its investors to vote on this. It should go through because Tata Motors is majority shareholders are the Tatas, so I don't see any reason for this not to go through. The DVR share price is currently trading at a discount of 43 to Tata Motors share. So those of you who caught on early when Anand was talking about this arbitrage, will be seeing some profit about right about now. This basically covers about what's all happening in India and as far as what is concerned happening in the US about the US market. Today's main topic which I wanted to discuss was war, because war seems to be looming all over the world, and it seems the world seems to be going through another phase, as they say, where the 70 odd years of peace which we had after World War II seems to be far behind us, and we're encroaching more and more into the territories of having all-out war from regional conflicts. The reason why I want to talk about this, war has a unique opportunity for investors, and I thought I will dive into that and talk a little bit more, elaborate on that a little bit more. I wanted to give some historical context. The word capitalism first appeared in 18th century Europe, specifically tied to war financing. It originally referred to money being lent to the French royal, who are known as the capitalists. The origins of the word capitalism comes from war and France, like I said. So to get further into this, I would like to talk more about the recent increase in defense spending, which you can see happening across the globe. It's been reported by the Stockholm International Peace Research Institute that it's up by nearly a rise of 7% in global defense spend last year, reaching to a record of $2.4 trillion, which is 2.3 of the global economic output. The increase is partly due to, of course, the Russian-Ukraine war which is going on, and also, of course, US, Europe, and Ukraine and Russia significantly being the contributors to this hike which we're seeing. But every geopolitical region monitored saw an increase in defense spending that includes all over Middle East, all over Asia, what's happening in Taiwan, what's happening in the Philippines, what's happening in Middle East, like I said, and in China. So what is the government's doing? Like the UK Prime Minister Rishi Sunak came out. He says the UK plans to increase defense spending to 2.5 GDP by the year 2030. And NATO has also announced a $100 billion spending plan. The US Congress, meanwhile, has approved $95 billion military aid for Ukraine, Taiwan, and Israel. So, what I want to talk about is the historical comparison and transparency issues of this. To talk about historical comparisons, we can talk about World War II. Despite all this increase we are seeing in defense spending across the globe and across the region, it is nowhere near the point it was during World War II. During World War II, US and UK had spent around 8 to 6 GDP on its military respectively. Historically, the actual cost of funding this kind of methods of war has been obscured from the voters. Like I said, in 18th century, European kings issued debt to fund wars without any kind of scrutiny or legislative framework in it. So war always doesn't mean there's transparency. War funding doesn't mean it's transparent. A lot of it is buried and we cannot really see it, and scrutinizing it is very difficult. So what are the physical implications of this? The Watson Institute of the Brown University noted that the US has spent $8 trillion on military efforts since 2001. Most of this funding is done by borrowing. Future interest payments could surpass $6.5 trillion by the year 2050. Claiming that a military spend is fully funded and by the politicians or by the president or the prime minister is not founded. This is where the transparency issue comes. Most of the spending nowadays seems to be fully done on borrowing and increasing debt, which is what the problem entitles. There's usually relying on spending cuts and a lot of speculative funding sources, which is what's happening, and that is where the concern is being raised about, because financial transparency is lacking and none of this financial plan which they have are sustainable, because you cannot borrow yourself for a war and make a future payment on a later date where your interest payments itself surpasses what you are spending on the war. But there is another side to this. War financing and war has led to a lot of financial innovation, and we'll talk about this also because it could be of interest. Historically, wars have spurred significant economic interventions, financial innovations, and technology advancement. For example, the central banking idea itself was established in Great Britain in 1694. Before that, we did not have central banks, and it was the wars which Britain was involved in which spurred the idea of a central banking framework. Then during World War II, US was the first one to start issuing something known as war bonds. In the development of financial repression tactics, we can see now what is happening throughout the world. Using finance as a weapon of war, especially what's happening in Russia, what Iran has been going through, North Korea has been going through, especially when Americans control the world reserve currency, the US dollar. They can dictate terms, and they do use it whenever they can to avoid an all-out confrontation with their proposed enemy. They use financial tactics, deploy pressure on their enemy to convince them not to go down a certain road. So the main issue which we have with this war financing which is happening in the world right now is the borrowed money which it's all relying on, which is a tremendous amount of debt, and the high interest payments which are going to be coming because that's where interest rates are right now. And the US government seems to be borrowing more and more and binging on debt, and this has been an alarming rate which we have spoken multiple times on this channel, and I'm sure you can find multiple other YouTubers who have spoken about this. So investors should be, particularly bondholders, should be aware of potential financial impacts of geopolitical tensions for this reason alone, and the increased military expenditures which are proposed in the coming months and years ahead by our governments. So do keep this in mind. How war has implications on our investment and our finance is something to keep in mind as this from a theory becomes more and more into a reality. Thanks for watching the program today, guys, and I'll see you in the next one soon. Bye.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.